Welcome to the daily insights that matter. Now, according to investment data firm Preqin, India-focused private equity and venture capital firms are sitting on unallocated capital worth $12.88 billion, which is the highest since at least 2016. Now, while venture capitals focusing on India are holding unallocated funds or dry powder worth $6.81 billion, PEs have an unallocated corpus of $6.07 billion. Globally, the year 2022 was the worst for startups in general. For startups in India, the funding winter meant a drop of almost 40% in fundings year to date, and the number of investment rounds shrank by 32% as well. But does this mean that 2023 could be a bumper year from a funding standpoint, given the unutilized capital? Let's look at that. Now, given the macro environment, which is still unpredictable with regard to the trajectory of inflation and interest rates globally as we approach 2023, we think there might not be a meaningful rebound in the short term. However, given that China is no longer the most popular country for investors, Indian startups are in a unique situation right now. China has been the hub for the PE or VC investments in Asia. China-based venture capital acquisitions made up for 68.8% of all Asian activity in the 5 years prior to 2021. And China-focused venture capital companies have consistently garnered the most funding from Asian investors. However, this is changing fast. In a November 2022 investor survey, China was overtaken by Southeast Asia and India as the best emerging market opportunity in private equity or venture capital space. Only 19% of investors are now citing China as an attractive investment destination. Meanwhile, Southeast Asia and India are seen as attractive investment destinations by 43% and 45% of investors respectively. Now, it's important to note that when it comes to emerging markets like India, there's an increasing preference towards the seed and early stage strategies where ticket sizes are similar and the time to exit is typically longer. This allows for more time to work on the business while the external market environment is still volatile. Now, the centre is likely to earn around 30 to 35,000 crore rupees from the windfall gains taxes on oil companies this fiscal due to the falling global crude oil prices and the reduction in the levies since they were imposed on 1st July 2022. While the Finance Ministry has not given any official estimate of the revenue to be raised from the windfall taxes, it was initially expected that it would raise at least about 60,000 crores this fiscal. A windfall tax is a higher tax rate levied by governments against certain industries when economic conditions allow these industries to experience above average profits. So when any industry, in this case the oil and gas industry, benefits from an event or a one-off external situation like the Russia-Ukraine war that they were not responsible for and make sudden profits due to the rise in crude oil prices, these profits are taxed separately over and above the normal taxes that these companies are to pay to the government. Now, in order to tax the subnormal profits being made by domestic producers of crude petroleum when international prices rose, the government had imposed these windfall taxes. Now, these comprise special additional excise duties of 13 rupees per litre on diesel exports and 6 rupees per litre each on petrol and the aviation turbine fuel exports. Now, it has also imposed a special additional excise duty of 23,250 rupees per ton of domestic crude oil production. No windfall tax is applicable on the exports from special economic zones. Having said that, they are up for review almost on a fortnight basis since then and have seen reduction in the recent weeks due to the cooling crude oil prices. Now, the lower collection is, however, not expected to impact the government's fiscal math as tax collections have been buoyant and higher than estimated till now. Going forward, the windfall taxes on domestic crude oil production levied by the government in 2022 are expected to be phased out in 2023 with the moderating of global crude oil prices. So what does all of this news mean for you? Given the unpredictable global macro conditions, a major resurgence of private equity and venture capital investments like the one seen in 2021 isn't expected yet. However, India is seen as a bright spot even during these times and will attract a larger share of investments in the years to come. This will therefore have an indirect positive impact on you. The windfall gains tax was an additional tax that was imposed mid-year and had as such not been factored in the calculations for the budget estimates for FY23. That said, the collections from the tax, even if are lower, will not have any major impact. This will therefore have an indirect neutral impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.